Welcome back to my channel. Right now, the typical home in the UK is valued at around £268,000. Over the past year, that figure has risen by 1.3%, which on the surface suggests the market is holding up well. But beneath those reassuring headlines, a very different story is unfolding. Recent data released by Lloyds Bank reveals a list of towns where property values haven't increased at all. In fact, they've dropped, and in some cases quite sharply. In one location in the southeast, prices have fallen by nearly 9% in just a year. On a £400,000 home, that equates to roughly £36,000 wiped off the value, more than the average annual salary in the UK. While the media continues to talk about recovery, there are entire towns quietly losing tens of thousands of pounds per property. And it's largely going unnoticed. If you own a home in any of the areas we're about to go through, or you're considering buying there, this is something you need to pay attention to. Let's start from number 10. Stockport in Greater Manchester sits about 7 miles south of Manchester city centre and has a population of roughly 295,000. Over the year leading up to October 2025, average property prices here fell by 4.7%, according to Lloyds. That's a drop of £16,289, bringing the average home value to £330,654. What makes this more striking is that the wider Northwest region actually grew by 3.7% during the same period. So Stockport isn't just lagging behind nationally, it's underperforming its own region. One key reason is pricing. Stockport is relatively expensive compared to nearby areas. Buyers are increasingly comparing options and finding better value elsewhere. For example, Wigan saw growth of over 10%, while places like Salford and Oldham offer more space for less money. As a result, many buyers are choosing to look beyond Stockport. Despite its charm, including its well-known market hall and viaduct, the numbers suggest demand is shifting away. Unless the pricing gap narrows, this trend could continue into 2026. At number 9, Barnsley in South Yorkshire, located about 15 miles north of Sheffield, with a population of around 250,000 across the borough. Here, house prices also declined by 4.7% over the same period, equating to a £10,624 drop. The average home now sits at £215,552. Although the cash loss is smaller compared to other areas, proportionally it's still significant given the lower price point. Barnsley has made progress since its mining era passed, with investment in the town centre and a growing digital presence. However, the local job market still trails behind nearby cities like Leeds and Sheffield. With both cities accessible in under 30 minutes, many buyers are willing to spend more to be closer to stronger employment hubs. Even though Barnsley has a popular market and local appeal, those factors alone aren't enough to sustain price growth. Next at number 8, Brighton in East Sussex. This coastal city, about an hour from London by train, has a population of around 277,000. Property prices here dropped by 4.8%, a loss of £20,254, bringing the average down to £404,874. Brighton has long been one of the UK's most expensive seaside locations, and that's part of the issue. During the pandemic, remote working drove a surge in demand as people moved out of London seeking lifestyle benefits. But now that surge is reversing. With mortgage rates above 4.5%, affordability is being stretched, especially in areas where prices exceed £400,000. Monthly repayments on a typical mortgage have become a major barrier. While demand to live in Brighton remains strong, rising rents alongside falling purchase prices suggest people are choosing to rent rather than buy at current levels. At number 7, Cheltenham in Gloucestershire. With a population of around 120,000, this town saw prices fall by 5%, a reduction of £21,616, bringing the average to £411,593. Cheltenham is known for its elegant architecture, racecourse, and reputation as a desirable place to live. But that reputation comes with high prices. A 5% drop at this level is substantial and can significantly impact homeowners who bought recently. Like many high-value areas, Cheltenham experienced strong growth during the pandemic, and what we're seeing now is a correction as prices adjust to what local incomes can realistically support. Number 6 is Cardiff, the capital of Wales, with a population of around 370,000. Property values here declined by 5.2%, which is a loss of £17,079, bringing the average price to £310,577. What stands out is that Wales overall saw prices increase by 2.3% during the same period. So this isn't a nationwide issue. It's specific to Cardiff. Rising costs and affordability pressures in the capital are pushing buyers to surrounding areas like the Valleys or Swansea, where homes are more affordable. Despite strong investment in Cardiff's infrastructure and city centre, higher borrowing costs are limiting what buyers can afford, shifting demand elsewhere. At number 5, Worcester in the West Midlands. With a population of around 105,000, house prices here dropped by 6.1%, a loss of £21,724, bringing the average to £331,977. Worcester ticks many boxes: historic setting, good schools, and decent transport links. But it sits in a tricky position. It's more expensive than places like Stoke-on-Trent, yet not as well connected or in demand as commuter hotspots closer to Birmingham. In a higher interest rate environment, buyers become more selective, and Worcester is being squeezed from both ends. Number 4 is Solihull, also in the West Midlands, bordering Birmingham. With a population of around 215,000, prices fell by 6.2%, which equals a drop of £25,976, leaving the average at £390,292. Solihull has long been considered one of the more desirable areas in the Midlands, offering good schools and green spaces. But as mortgage costs rise, its premium pricing becomes harder to justify. Buyers are increasingly looking at nearby alternatives like Tamworth or Coventry, where they can get more for their money. Additionally, uncertainty around HS2 has weakened one of Solihull's major growth narratives. At number 3, Chester in Cheshire, with a population of around 130,000. Prices here fell by 6.4%, a loss of £23,114, bringing the average to £340,415. This decline is notable because the wider Northwest region actually saw growth. Chester's appeal, its historic charm and tourism, hasn't been enough to sustain demand at current prices. Nearby cities like Manchester and Liverpool offer stronger job markets and saw better performance. Buyers are increasingly opting for surrounding areas where they get better value. Number 2 is High Wycombe in Buckinghamshire, located about 30 miles from London. With a population of roughly 135,000, prices dropped by 7.4%, equating to £34,994 lost, bringing the average to £436,379. As a commuter town, High Wycombe has traditionally benefited from its fast rail links into London. But with hybrid working now common, that advantage has weakened. Buyers are questioning whether it's worth paying such a premium when they don't need to commute daily. Sales volumes have also declined, and properties are often selling below asking price, indicating a market still searching for stability. Finally, at number 1, Crawley in West Sussex. With a population of around 120,000, this town saw the steepest decline, 8.9% in just 1 year. That's a loss of £36,317, bringing the average property price down to £372,202. Crawley's economy is closely tied to Gatwick Airport, its largest employer. While travel has recovered somewhat since the pandemic, it hasn't fully returned to previous levels. Combined with a large supply of similar housing and stretched affordability, this has created strong downward pressure on prices. Fewer buyers are entering the market, and those who do have more negotiating power. So, what's the bigger picture? The UK housing market as a whole isn't collapsing. Prices are still rising modestly on average. Regions like Scotland, the Northwest, and Northern Ireland are seeing growth. But beneath that national average, there are clear pockets of decline, particularly in higher-priced areas where affordability has been stretched. These declines are largely happening in towns where prices surged during the pandemic and are now correcting as higher mortgage rates limit buyer capacity. In many cases, Nearby areas offering better value are pulling demand away. If you already own property in one of these locations, there's no need for panic. Real estate is typically a long-term investment. But if you're planning to sell soon, or you bought recently with a small deposit, these trends are important to understand. If you found this breakdown useful, make sure to subscribe for more property insights and updates.